Hey, what's up, guys? This is TerrenceRe, and I'm at you today with a stock market update. We're gonna go over price action for the day. We had a nice sell-off, and then we're gonna talk about some of the big movers for the day. And then I give you my outlook of what I think may transpire for the week. No one knows for sure, but I give you my best, my best work. Let's see, make this. There you go, guys. All right, let's get this up. What I'm showing right now is the FXE. This is a way of kind of like if you wanted to play the US dollar. So like, let me show you the dollar, right? So the dollar kind of looks like this. So this would be that would have been the opposite, right? So you could play FXE. I was looking at that, which I don't advise. I don't like the liquidity in it. Today it only traded 195,000 shares. You see gaps all in the screen. Stay away from it. Not a liquid option market. I would not advise to trade this underlying up or down. I don't care what it does. You could use UUP. This now, if you see UUP, let's look at the shares. It traded 5 million shares. So that's a little bit more liquidity. So if we were to look at the dollar index, all right, you see how it looks? And then you go back to UUP. And you can see this would probably be the best way to get exposure to the dollar index. All right. So today we had the S&P 500. The futures were down almost 1.5%, 54 handles. Looking at the Nasdaq future, they were down almost 1.25%, 1.25%. Excuse me. Dow futures down 1%, and the Russell futures were down 1%. The bonds were down, notes were down, oil was down 2%. The only thing that was up out of that I look at on a daily basis to to decide the market is gold futures were up. So that's what you would call like gold is kind of like the fear trade. The market's selling off. Oh, where can I put my dollars? Where can I put my dollars? So you see gold futures going up. See gold, and I've been on gold for the past couple weeks because of this right here, this up move right here, this pullback. So I do think, let me throw my fibs on there and I'll give you some projections on what I think. So, let's see. Now, right on, right on cue. We already hit the first level, right? So my second level right here, right up here at this, up against this support. Let's look at this. So I see gold futures going up. Gonna get right up into this level, I think, right? No one knows, but this would be a level for me. Tighten this up, make it do what it do. So that right there up around that 1892 handle on the gold futures. So I'd be looking for gold to make a move up. Based off of what we got here, we got a nice little up move, kind of made like a little pendant up here. Let's see if we can get it to break out. Got it something like so. Right. Now, some people trade. So some people would say you got the pole, you got the pullback. So then you put your target as long as this pole. So take this pole. So this would be like A B equal, and then this is B C, and then C D. So the length of A B should be the length of C D. That's that move right there. It's almost like what you would call that is a harmonic pattern. That's your original AB equals CD. Your 4 move harmonic pattern. So you like 1, 2, 3. And then a lot of times you say, where's the fourth move? So once it hits here, it can reverse and give you a violent move to the downside. It's possible, or keep going. But either way, I expect a reaction here, back into here. And then if it's going to continue forward, it'll go there. But it'll play these levels in between. So I had no intentions on talking about gold. I really just wanted to talk about the SPX. But sometimes just going through, looking at the markets, a lot of times I just have like an outline of the show, and then I just come on and I just pull stuff up, and I do it, you know, while I'm recording. So let's go down and let's take a look at. So one of the stocks that was moving up on the day. Now the day actually started out, when I looked at it this morning, all of this was red. Well, most of it anyway. Meta has turned. So if we're looking at Meta, you can see Meta got an up move and it pulled back. And so like right in here is what Meta is. So it's possible. It kind of looks like gold. Kind of got something like so, right here. So let's see if we can get, so you got your pole here. So let's see if we can get something up to the upside in Meta. Not a bad look. I don't like, not as clean. Apple, man, Apple look horrible. So this is what you would call a stock picker's market, right? So before this year, stocks just went up for the most part. When we had low interest rates. This is when you had the time period where you had Dave Portnoy. If anybody ever watched any of his videos, I love his videos. They funny to me. Watching him, like when he was pulling letters out of a bag and it's like, buy this stock. He just pull a letter out of the bag and buy the stock and make money. That's because everything at that time was going up, right? You are no longer in that environment. You have to pick stocks. You got to know what you're doing. Unless you're comfortable shorting, you can do that as well. I don't want no parts of owning Apple. I don't want no parts of owning Apple. I still got a level on Apple down to 115. I still think Apple can get down to 115. So, if you're willing to sit with the pain, now that's just what I think, right? So I've been had these levels since way back here, but look, even though it came down into here, it went all the way back up. So you can play these bounces even when it came here. Look at that move. So it's back down here, took this low out today, took out this low. Let's see if we find some support here in Apple. I would suspect we find some support right here at this gap. We got a gap right there. So I would expect Apple to hold up there. Let me throw some. Let's see where we at on the RSI. Ooh. So I said ooh because the RSI isn't oversold. It's not oversold yet. So we still got more down move. We still got more room to the downside in Apple. So I will be where we got a nice IV rank of 46 up there. So premium sellers, ASM play. It's game. You can do whatever you want. Apple strangles, selling calls. So if you want to sell a put, if you think we're gonna get a bounce here, which is possible, that's support. Put or a put spread or just getting long shares. Any of that is possible. When you have a high IV rank, you can pretty much sell premium everywhere because you can go further out. So when you have a high IV rank, that means volatility has expanded. So instead of let's say you got low vol, and if you have low volatility, I'm trying to think of what's the best way to draw this. Or do I want to draw it on the screen? So if you got, I'm gonna make my screen big so you guys can see me, right? So look at the screen. So when you have low volatility, and here's your let's say your expected move is here. As volatility expands, the expected move can go out. Meaning like what would be a normal standard deviation with low vol, when the volatility is high, it begins to expand. So instead of selling like a $10 wide, um, or going out $10 and collecting a couple dollars, you might be able to go out $15 and collect a couple dollars on your short options. So vol, that means option prices get more expensive as well. But what happens is when the IV rate contracts, when volatility contracts, then those option prices will come in some. And so what you sold to collect premium, which was high, is now those prices come in and you make money on the vol contraction. It's kind of like selling. Think about it. Think about high volatility like this. It's like selling house insurance or selling like flood insurance and it's already raining. Like the water, like the dam is already broke and the water already is flooding the streets. And then you got the policies and you can sell them right now. Now you may have to pay in on some of them though, but you can charge a high price. So that's how you look at option volatility and the prices of options as that volatility expands. All right, let's get back to the charts. Let's take a look at Amazon. I've read some articles today where certain analysts were saying that Amazon is ripe for buying. Not to me. Negative. You can do what you want to do. You can do what you want to do, but it already took out. This was a major support level, and look, let me show you. This was a gap right here. It came down to the past the gap, closed it, retraced, and then came back down, and it's right here trying to take this low out. We are not oversold, and you can still take this low out. You take this low out, the low of $81.30 is in the sights. Like it's in the sights. So trying to catch a falling knife, I don't like doing that. I'd rather see a couple up days and a pullback. Like get ready to make another higher high, something like that. Google, yeah, Google is right. Look at Google. It got so much more room to the downside though. Google is right here in the support. Like it's in the gap. It's in the gap right here. Now will it, let me extend this. This is good stuff. This is good stuff, guys. Actually, that gap gonna be right there. Can it go all the way through? Right? Are we gonna get that? I don't know. We still got room to run. We're not oversold. Microsoft. Microsoft trying to hang in there. If you ask me, you can throw this one out too. I don't like any of these. Now you can, they can go up. I'm just saying I don't like them. I'd be cautious. Tesla getting the what kicked out of it. It's getting the what kicked out of it. Yeah, I don't think Elon can save it. Not right. I got a level down here at 105. I know that seems crazy, but I don't think it's gonna go straight there. But who knows? Might come back off of this weekend and catch a gap down. So let's talk about. I ran through the fangs, gave a little bit of analysis. I'm not bullish at all. Maybe next week we get a pullback though, and I'm gonna talk to you about why I think that. And it may not be in the FANG stocks. It may be in some other stocks in the SP 500. But because Adobe had a heck of a day today, let's take a look at Adobe. Adobe they were talking about Adobe a lot on TV today. I think they had somebody, what's that? Come on now. They had somebody from Adobe. I don't know if it was the CEO. I don't know who he was. What's crazy is it tailed off towards the end of the day. It still finished up almost 3%, $9.83. But it gapped up and was up here when the day started. And as the day went along, it just kind of peeled on back. So I don't know, guys. I don't even know if I would feel safe getting into Adobe. So I would just watch that. I had not looked at the chart. I just know it had. I know it had a great day. I seen it on TV. It's been up. Got a 3% move today, and that's you just say you're looking at it and you see this red candle, but remember you see this wick right here. So this is where it was today, and it finished down here. At the same time, it gapped up. It still finished up $9.83 on the day, which is 3% move in Adobe. Let's take a look at the SPX, and then we talk about my weekly outlook. You pretty much know it if you've been paying attention. Let's go. Let's move this around. Let's now couple things before I'm gonna take this off. Then I'm gonna put it on. First thing I want to do is bring up my active trader screen, and I got my moving averages. Now, look at this, guys. I want to show you something. We're gonna look down here at the MACD, moving average convergence divergence. This part right here is showing you your acceleration of the MACD, acceleration and deceleration. You see this histogram bar, this histogram bar. That means that this day actually, as far as momentum, was a more momentous day than this day. That's why this bar is bigger. And it's dark red or bright red, however you want to look at it, and that would be dark red. But this bright red is gaining in momentum to the downside today. I have this moving average looking like it's getting ready to cross over here. I predict we're going to get that crossover next week. I would expect the market to go down some more next week. That's what I think. Couple that with the expected move. Now let's go to the trade tab. Let's look at, all right. Let's see. Have you see I put some work in a little bit today. I put on a weekly butterfly. A little cheap butterfly, $10. I hit one today. I put it on, I think yesterday or the day before for $10. Sold out of it for $60. I do these not every week, but most of the time. It's a cheap little shots. Bet $1 make 6. Cheap shot. So expect to move $87 the week of Christmas. That I would have to go back and look at previous years, but I would think that that's pretty high for the week of Christmas. You wouldn't expect a whole lot of trading to be going on this week. And I'm not even sure if the market would be open on Friday. I'd have to go look. I hadn't paid attention. But if it's only a 4-day week, that's even worse. But if you're looking at this or the following week, we may have a day or two short. So this 87, all I did was put a butterfly down here around that area, right? So if I go to the screen and put my expected move up, expected move indicator, it's already plotted for me. It actually has 37.77 because I put it on before the market closed, and I think it may have moved some, which is fine. So I'm right around 37.90 is where my butterfly is. And if we come over here, you'll see that's where my short strike is. If I went to the analyze tab, you could see it. Let's see. It's it right here. So let's see if I can make this bigger. I don't know if I can or not. Gotta go down here. There we go. Move it. So all it is just showing that I want to see where the market. I gotta get it in here. I need the market to close somewhere within here. Really, I'm not gonna hold it to the 24th, or to the 23rd. I won't try to do that. I'll just hold it until like I can make 50 or 60 bucks, 70 bucks on it. And that's all I try to do. Because you're paying 10 bucks for it. If you can hit these every week, you can do, if you want to do 2 or 3 of them, you can do 2, 3, then try to catch them. All you're trying to do is pin where you think the market's going to go. And if the market runs through your strike, for the most part, you should be able to sell it for more than you paid for it. And that's that. So go back to the chart. Like I said, now, before I took off my fib retracement, let's see if the fibs line up with what we got on the screen. Let's put the fib on. Turn it around. All I'm doing is going from low to high or high to low, vice versa. Put my Fibonacci retracements on, and you can see that sweet spot right there. That's that 38.2 level. So I could definitely see it bouncing up into there, which is fine. I got to Friday, so I wouldn't be surprised to see a couple candlesticks up into here, and then once it get up into this area, take off to the downside, or vice versa. Come on, Monday market open, we down here somewhere around this area. I close out my butterfly spread and take that little 60, 70, just depends. Sometimes, to be honest with you, I'd rather it go back up here Monday, Tuesday, and then Wednesday and Thursday, make that move towards the downside and continue. But I really do think we're gonna have a continued sell off in the SP500 just because of this. The momentum is gaining. This momentum is higher than this. So I expect it to continue to the downside next week. And with that, guys, that's gonna be it. If you're on here and you got something out of what the work I put in, hit that like button, hit the subscribe button. I do little stuff like this all the time to give my own little insight into what I think the market's gonna do. I got my own little semi little news gig, or anyway, finance news anyway. So with that, guys, I'm gonna be out. Peace.